That 27 goes into your
If it doesn't get to 16.
If it doesn't hit 16, you keep the 27, you keep your shares. Then you look out at the option tables for the next month and say, okay, what do I think GE is going to do? Right? And you see what the price of the options are, and you select the one to sell out there and try and collect rent again.
So, if you're a buy and hold person that just wants to hold on to a stock for a long period of time, this is a good strategy to every month generate some additional income. Want to go to the, see, any other questions on this? Now, please feel free to ask questions because it is a difficult concept.
Yeah, I have a question. So when you actually do accumulate money from your options transactions, does it go back into do you reinvest it into the stock, or does it just go into your portfolio as just cash on hand?
It goes back
As
into
cash.
your account as cash.
Okay.
What's the tax ramifications?
Good question. Depends, right? There are a couple ways you can do this. First of all, you got your brokerage account, right? Options, you can sell them if you have just an open account, say like with Fidelity or someone. Basically, you're going to pay capital gains on the money that you make on these options, right? So at the end of the year, if you only did that once, right, you picked up that $75, right? Uncle Sam is looking for his percentage of that profit, and since you did it for a month, right, it's short-term gain. Now, that's one scenario, right? That's just a regular account. One thing that we do, in terms of our personal accounts, we have the brokerage account. Underneath there is an IRA, right? Most of you guys got IRAs probably. You can have an IRA under the IRA umbrella, right? You know that there are several ways you can invest your money. You can invest your money in CDs, you can invest it in mutual funds, right? You can stick an annuity in there, although I wouldn't necessarily say do that, or you can invest in stocks, right? Okay. So if you have an account and it's an IRA underneath there, you can get an options agreement contract, open that up, to sell options on whatever stocks you hold in your IRA account. So now, the money that you're making per month, right, is just stacking because it's all now deferred taxes as is consistent with the IRA account.
What's the tax? Is it 20% for short-term capital gains?
Short term right now, what is it? Is it 20% or 15%? It's 15%. Now they're trying to.
Wants to go to 20, but he never said that.
Right. That's the big debate, right? Keep the Bush tax cuts, or go to something in between, or just let them expire.
But even after paying the taxes, you still come out. You're making some money. Any other questions? Because it's a tough concept, believe me. Because even to this day, you still hit the wrong button sometimes.
When you lose your shares, you're losing your shares, but you're paid. You're getting paid for your shares.
You're getting
Right.
paid for it.
But you may not be getting what you wanted. Obviously, you don't see it mature necessarily.
No.
You don't write options unless you're willing to give up your shares for that money, right?
See, because
So,
go ahead.
So what you can miss out on, right? You sold your option at $15. 2 days later, GE comes out and announces they got the next cure for cancer or something, right? Stock runs up to $20. You just sold, basically what your profit is, right, is the most you're getting is $15.75, right? That's what you're going to get, because the person that bought that option, right, he's the one that's going to get $20, because he's going to take your shares of $15, then he's going to sell it on the open market for the $20, if that's what GE is selling for. You, however, you got your 15, because basically when you went into the deal, right, you said, give me 75 cents, and I'm happy getting 5% return on my GE shares for this month. And if I lose the shares, I'm okay with that.
So you're getting 75 cents per share plus 5%?
You're getting 75 cents, right? It is basically 5% of the 15, assuming you pay $15 for the shares. Yes, ma'am.
But if it went to $16, I still sell it and I still get to keep the share?
No,
No?
no, no,
Okay.
no. If you
I
sold,
heard
if you sold your option with a strike price of $15, and if GE went to 16, you still sell your shares at 15. But what you keep, right, you keep the 75 cents. So basically what you got for your shares is $15.75. Although if you sold me that option, right, I'll take your shares. You got your $15.75, so you're fine, right? Okay, I'm going out to the market and I'll sell them at $16. So I'm making an additional 25.
In that
cents on it.
scenario, assuming that you bought it for something less than
Less than
15.
Right.
But you know, when you hear a lot about insider trading and people getting early information and trying to take advantage of that in the marketplace, a lot of them go out and buy options. So if you watch the volume on options, and if all of a sudden you see $100,000, 100,000 contracts that suddenly were opened up, you know something is going on. And that's one of the things that, I mean, there's people that just make a living off of watching, you know, the volume on options. Like on CNBC, you have Options Monster. They've got all kind of computers just watching the volume and trying to figure out, you know, who's getting ready to buy out somebody. And you can do pretty good with that. Let's go back to, well, let's see, are we done with this chart on options chain? Is there any other? Make sure you kind of understand it now, because it's, or ask the questions. Don't, you know, hesitate.
Explain if it goes down to 14.
If it goes to 14, I've got some other charts that will cover that too, but if you bought it at 15 and it goes and the stock drops to 14, right, you'll keep the 75 cents, right, and so now you're out of, you only have a deficit of 25 cents. But you keep your shares and you keep the premiums.
What you want, right, if you own the shares and you sell options, as soon as you sell that option, you're hoping like heck it goes down, right? And you're hoping like heck it goes down so that when it expires, you get to keep that 75 cents, right? Because now that's cash. You can count it as cash, or you can count it as reducing your cost basis for your stock, right? Because you paid 15, all of a sudden now, okay, I got $75 back, 75 cents back. Basically, my price is $14.25. No, you do that your own math.
I mean, in your head is like that. Could
Right.
you do that if you sold and they try to tax you on it later? Could that, you could adjust your cost basis based on what you?
Well, see, keep in mind if that stock price is below where you are, where you bought it, right? It's a loss, right?
Yeah.
So you're writing off whatever you collected against the lower price of the stock.
So that's only if you sell it at that point, right?
That's only if you sell it at that point.
Right.
And see, for folks that are long-term holders, right, buy and hold kind of people, right, you know, you can put the stock in the account and just sit there and say, I hope this Dow goes up or whatever, right? Or when it goes down, you just sit there. I hope it comes back up, right? That's all you're doing. But if you utilize these options, right, you can start to collect some money as the market's doing this thing, right? As those charts that Tom showed you earlier. I mean, we know what the market's going to do, up and down, up and down. The question is, where are you financially, where are you in your life when the market takes a 30% dip? If you need your money, like a whole lot of people did back, last year or so, you got a problem, right?
See, just like, you know, I go back to the real estate example. You know, just because the value of your house happened to go down, you're not going to sell it.